Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the Magical Monday, the March 2nd edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, well, we've got you covered there, too. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices in the green with the exception of the transports and the spot volatility index. Transports are down 49 points right now. They're trading out to 93.37. The other indices, they're up nearly 3% inside the Dow, up 700 points. The S&P 2.5%, 72 points. NASDAQ 100, 2.75%, nearly 3%, 231 points to the upside. Russell up 19 points. Semis up 28. The spot volatility index. Now, the interesting thing here, and folks, I've been away from my computer until really 2 minutes ago. So today, whereas typically, I'll be able to prepare ahead of time, get a sense for what the markets are doing, identify support and resistance levels. You and I, we're going to be doing all of this here live. And but what I was about to say was when I take a look at the spot volatility index, and you'll want to watch this at the end of the day from a reading standpoint. Now, typically, we're in a marketplace that is trading. We're always trading on emotions, but the emotions that are present right now are fairly large, and you've probably seen that during the day. Just simply the swings inside the markets out here. So, but the point was, typically, generally speaking, when the spot volatility index, the two levels that you and I watch for are one-day rates of change above 10% and below 10%. Let me just simply open up the screen here. Here, in essence, is what we're looking at. And so what you will notice here, the green arrow. So watch today's one-day rate of change. It's above plus 10. It's below minus 10. Right now, we're at minus 0.1563. The reason that I point that out to you, in fact, I'll just simply go ahead and move over one of these green arrows in anticipation that I should copy it, though. That would make it a lot easier once I do that. But what those green arrows are represented on my screen that you're watching, those are days where we have one-day rate of change below minus 10%. So watch the end of the day reading there. Why? Why is Stevie even bringing this up to you? Because they tend to mark initiation moves, initiation to higher price. So let's say you're short and you're still sitting this out here right now. You'll want to know that what the spot volatility index signal, if you see that minus 10, something below minus 10% here, it is suggesting that the markets are going to move to higher price. Okay, well, Stevie, if they are suggesting they're going to move to higher price, where are they going to move to? Excellent question. I think for that, whereas the spot volatility index is dealing with the S&P 500, what you and I are going to do is we're just simply going to go shift our focus to the Dow right now. Now, the reason I know that is because, look, over the weekend, I was able to send out to subscribers what to anticipate this week, today, as an example, because what we saw inside the Dow equity futures contract, not interested in the cash Dow, not that I'm not interested in it, but I'm more interested in this because this tells the story. Well, what was Friday's session? Friday's session was a TD9 count. Beautiful thing. What do we have today? Now you've got a bullish candle. You got a bullish engulfing, at least at this stage of the game here. And what we can see is Stevie's red and green line. Forget about the red horizontal lines. Not that you forget about them, but price did finally find support at one of the breakout levels. That's with those red horizontal lines. But I'm looking at the squiggly line up top. And you, because you have been sharing your hour with me for so long out here, you've seen this pattern repeat over and over again. What happens when Stevie's line, his oscillator and change line, turns color? When it goes, in this case here, from green to red? Well, number one, it tells us the price oscillator is below zero. Not a good thing. But when it turns color out there, it tells us an eventual meetup between price and it. And boy, do we have the signal. As Tom would like to say, in spades. I like hearts, but spades, hearts, diamonds, clubs, it doesn't matter. That's what the signal is. So if you see that one-day rate of change that is below minus 10%, combined with seeing this little TD 9-count pattern that we've got out here that identifies tops and bottoms, as you and I know out here, and it's been working well for the equity futures contract. Sometimes it's just been these little hiccups that are out there. What should you expect? Where do you think price is going to inside the Dow if this were to close right now? What would be your price target? And you would say 27,004 something, because the number's going to change. And it might be in the 390s. It might be in the 420s. It all depends out here. Right now, that level is 27,409. Formula 409 out there. And so that's where a counter trend rally should take us to. And it's really the Dow that's the one that's giving us the best signals out here, because it's the one that completed that TD 9 count. Now, I see that Ruby wanted to take a look at the Russell 2000. Let me just take a quick look at the match. You're saying they're lagging in comparison to other major indices. Okay, let's go take a look at the patterns that it has as well. Let's take a look at its futures contract out here. Now, what we are not going to see here, well, I can't say that. You're in bar number 8 of a TD 9-count pattern out here. And Ruby, I think that if the markets are going to continue to move higher, and not that it has to happen, but I would say that the Russell 2000 should also move higher with the markets out here. And again, when we just simply take a look at, we'll go try to take a look at market profiles, which my system has been trying to generate market profiles really since early morning out here. I just don't know that I can trust them. And every time I reset them, they vanish. But I did see that from the time that I left early this morning to now, they're back in place. We'll come back to those out here. But right now, Ruby, if the Dow is going to move higher, and I can't guarantee that, but what I can share with you is a pattern that you and I have looked at so often that it helps you and I to be able to draw a conclusion. Where is this market headed to? Now, we're going to really have to keep our attention on the Dow because of its bottoming signal out here. But in the case of the Russell 2000, Ruby, I would say it's headed up to its oscillator and change line as well, and that's in that 1581 level. It doesn't mean we're not going to see jerks, moves higher and lower. I mean, this is the type of market that we're in out here. But the Dow is putting in a real nice counter trend rally, at least short-term bottom signal. That was done on Friday with that TD9 count. Folks, you need to learn that count. You need to learn that system. Just subscribe to Mastering Probability. Go watch that workshop for you, even if you do it for a day. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 680, S&P up 68 points out here. So let's go back to Ruby was pointing out something very, very important, and she was talking about the Russell 2000 here. And so when we take a look at it, now what you and I were looking at were the bigger picture. We're looking at the daily time frame, and so what we're going to see are these moves higher and lower. And the question is going to be on any moves lower, do support levels hold? That would certainly be helpful in the markets continuing their counter trend rally up on the daily chart to be able to meet Stevie's oscillator and change line levels. Now, if we look at the 30-minute time frame chart here, this is for the Russell 2000. If we just simply draw a rectangle out here, just got to grab the old rectangle. There we go. You can see here that this thing is just right now still in essence some type of consolidation phase. Not like I haven't grabbed exactly where it's at, but you can see this is the Russell 2000. So just consolidating sideways, whereas, and you'll notice that there's a TD9 count out here. So we should be anticipating as we came on the air at 1 o'clock, at least a short-term top. In this case here, the Russell Ruby pulling back to maybe 1486. Stevie's green line out there could even pull back all the way to 1458. Its breakout level, but the first place of support about 1486. Now, the 30-minute time frame chart for the Russell looks completely different than it does than what the ES Mini or the NQ. Let's pull over the NQ. Let's focus a little bit on the NQ right now. If we take a look at it, what you're going to see, well, first, what you'll see here is not a sideways move. You can see that we've been going from lower left on the 30-minute time frame to upper right. You can also see that there was a Gartley sell pattern that occurred this morning, about 4 o'clock, right as European markers were coming online out there. And so, and there, when we take a look at the performance, the lack of performance of the Dow in its hit that it has taken, clearly there's international play, because the Dow is the trophy horse for the international markets out here. And so the Dow itself, where was I going with this? I don't know. I'll come back to it. It'll hit. I know where I was going with it. It's not a surprise that when European markets come online, because the Dow should have been a better performer, if international participants were buying U.S. markets out here, and it wasn't. So, and maybe we can't prove that conclusion or what have you, but we can prove the conclusion that basically as soon as the international markets began to pick up any kind of traction, markets started to sell off right into what looks like maybe about 9:30. Let me see here. When did the market begin to turn? No, it's 7:30 this morning. It actually began to turn up. But here's the point. We've got a TD9 count pattern short term on a 30-minute time frame chart. Price just simply made it one of three options here. Price is just simply going to have this little hiccup, which is a bar or two before it moves up again. It's going to move sideways, maybe pull back and test Stevie's green line. That's the most likely outcome, 86.30. Now look, at close below 86.30, you're looking at 85.81 in the NQ, all the way down to 84.05 out there. If it's just a little hiccup, that'll tell us something important about the markets, Ruby, and maybe that will be applicable to the Russell 2000 as well out here. Now, that's short term. Let's try to jump in between short term and the daily chart. Let's start with the 5-hour time frame chart for the NQ. Let's just stick with the NQ right here. What we can see about the NQ, beautiful wave number 7, that's letter G. So it's formed that nice G. And then what's taken place out here over the course of really since the close on Friday, so Friday's close, let alone last night's open, even though there was a gap to the downside, still by the 5-hour time frame, the 5-hour time frame bar would have been 11 o'clock last night, it still managed to test and reject Stevie's red line. Whereas that had acted as resistance all the way down. Now what you and I are seeing is it's beginning to act as support. Now, if the once the market works out the 30-minute TD9 count pattern out there, and let's assume I'm going to assume that it's going to continue to move higher. The next level of resistance to watch inside the NQ is 88.45. That's the top of its 5-hour time frame chart. More likely than not, the price target inside the NQ is going to be its breakdown level on that 5-hour time frame, 91.91. Now, 91.91 is the level that we're anticipating, or Stevie's anticipating. But when I go take a look at the daily time frame chart, we've got to see, hey, where's Stevie's red line? Did it even turn red? I'm sure it turned red. I'm wrong about that. It didn't turn red. Man, oh man, that is actually pretty amazing. That is how strong that NASDAQ, even on this decline out here. So it hasn't turned red. And therefore, the idea that it has to move up and test that 90-92 level doesn't have that same type of conviction from a pattern standpoint as it was when we took a look at the Dow and we took a look at the Russell 2000. The ES Mini, its oscillator change line has turned red as well. So the NASDAQ's not going to disregard that, so to speak. But that just brings us back to the 5-hour time frame chart. And that 5-hour time frame chart, the level to be watching, certainly overnight, or look, if the market sells off and we can go from 622 positive to 622 negative, it's not unthinkable. But watch the 88.45 level, because I think that'll then give you your next clue. If the European markets are open and you're up at 3 to 4 o'clock in the morning or what have you, and the NQ's up at 88.45, then the real tell sign there for you will be, does the market sell off from there? Because you would anticipate that would be the course of action, even if the market finishes up nicely like it does today. That would just simply be the normal course of action, where if it doesn't, and you start to see the NQ closing above 88.45 out there, the 91.91 becomes that price target. So I hope that helps you out. At least that's just me sitting down in front of these screens, knowing these patterns that are out there, and then saying, okay, what are the markets communicating to you and I right now? And that's all we can do, is always sit down in front of the screen, see what the market's communicating to us now, see what patterns are out there, be able to try to anticipate what the market's next move will do. But regardless of that, when the market does make its next move, sit back down, take a look at your screens, and see what they're communicating to us from a technical standpoint out there. Now, I had mentioned the market profiles out here for the, if I didn't, I did say it for the daily time frame. I'm just going to expand, for example, the ES Mini. You want to talk about a large profile? Oh, shoot. By expanding it, it got rid of it? Ah, shoot. Nope, it's back. It's back. Okay. It's been trying to form this profile, as I said, all day or all morning long out here. So we're using, what did I do? Good Lord, Steve-O. There you go. I meant to turn off price. So this is about the widest daily box, maybe not in history, but maybe close to history out here. Peter, take a look at this. 2907. is the bottom. Forget the cents out there. Look, this only trades in quarters, so it would have to be 2907, 0.25, 0.50, 0.75. That's it. It's 2907. Take a look at the center line of that box. It's 2962. Where do you think the top of the profile is? It's above the most recent profile high that we've got, 3397.50. Now, look, folks. This profile may not take hold. It exists right now. Let's not be ignorant of what I just said. It's our role to sit down and take the new information that we have when it's available to us, keep coming back and taking a look at it. This is a wide I won't add the adjective in there. You can add the adjective for Steve-O. This is a wide blank profile that is out there, and I'm sitting a wide keister profile. We can say keister, can't we? Absolutely. In fact, there's a town, I think, called Keister out there. I want to sit on that town. Hey, so what does that mean, Steve-O? This is a bullish structured market profile in the ES, folks. Right now, if this profile continues to take hold, it says price could make its way up to 3397.50. You want to pull your hair out? Wowzer. Hope you're right. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 618, S&P 60 points. Let's go to one of our questions, only question so far that has come in. You too can send me a question if you would like me to take a look at an instrument that you have an interest in. Johnny D is interested in taking a look at the healthcare sector. So would you take a look at the XLV to see where a possible counter-trend move would take us to? Absolutely. First, let me just give you the profile levels out here. See where price is trading in relationship to its daily, weekly, monthly, below the daily, below the weekly, with inside the monthly. So counter trend rally here, one of the levels, Johnny, to put down on your pad of paper is going to be 96.14. That is the top of its brand new monthly profile. So that's a March profile that is just formed out here. 96.14 is resistance, and 89.99 would be support. Let me pull over my other charts out here. Let's take a look at the XLV. Let's start with the daily time frame. Let's get this puppy. Can we get it? What the heck? Calculating. Oh, man. Bummer. There's a problem here with something. That's interesting. It's been calculating, I think, all morning. Okay. Yeah, I had to make some changes over the weekend and stuff. But in any event, I can still get you covered here. Give me 1 second to get the XLV going on, let's call it Stevie's backup system, the old system out here. So now let's let that thing get populated. Okay, so let's come back to the daily time frame chart. So, Johnny, just like the Dow, the XLV happened to, at this stage of the game, form its bottom with the TD9 count. So that was on Friday. So it's got a bottom pattern, bottom signal. And here, much like you and I looked at the Dow Equity Futures contract, the ES Mini, the Russell, whatever we looked at out here, we can see that its oscillator and change line has changed from green to red. And when it was changing from green to red, price wasn't testing that area out here. And that says that we should see a meetup of price and it. So with regard to where the rally, and we don't know if it's a counter trend or not. At this stage here, we can call it a counter trend, but we don't know whether it is or it isn't. It could be a bottom. Right, we've got bottoming. We have valid bottoming patterns out here for some of the ETFs and some of the indices, not all of them. We just have to take this one day at a time, one step at a time. But this would say about 98.52, 98.50-ish in that vicinity out here is where you should see a rally move up to test Stevie's red line. At that stage, that's where it would let us know if there's even more to the so-called, what we'll still call it a counter trend rally at this stage of the game. So that's what I see when I take a look at the daily time frame chart for it. Let's look at the weekly, get a feel for what So on the daily, we know that it formed a bottom, right? Well, I say right. You say, what do you mean? Well, it had that TD9 count pattern, and we know that that can identify tops and bottoms. What was going on the weekly basis? I don't know. We know the price had closed below support of its profiles, but what else was it doing? Son of a gun. What was it doing? It was pulling right back to support. Right back to support. Right back to its breakout level of 91.48 that is held. So, Johnny, as long as price on a weekly basis above 91.48 out there, prices pulled back to support, and the daily could be more than just a counter trend rally. That's one possible message out here. Let's further investigate this. We said that price was trading inside a brand new monthly profile out there with the price level of 96.14. The other level to be watching on a monthly basis, or overall, I suppose, would be because this does have a monthly Rhodes Momentum Indicator top, that bearish engulfing, followed by last month's move below Stevie's green line on a monthly basis. And so 97.82. So I know I've given you a couple of numbers, but you've got now the range of where the XLV should likely trade up into. And Johnny, I hope that helps you out. Thanks so much for writing in. Best of luck if that is the trade that you are in. No other questions at this time. So let's go take a look at what else should we look at? Let's go look at the other usual suspects out here. Gold, bonds, light sweet crude, and so forth. So here's an interesting thing. If we take a look at we talked about the TD9 count pattern. We've looked at it. We looked at it on the XLV. We looked at it on the Dow. And let me just get rid of this A to B equals CD pattern. And if you take a look at what the T-bonds, the 30-year T-bond is doing, what is it doing? It has already formed a TD9 count. Number 9 was yesterday. But remember, with that TD9 count, it can be the bar following 9 that identifies that high. And that says that if T-bonds are going to make a U-turn, as long as price doesn't trade above today's high, we could see a pullback. Pullback to where? Well, first level, 168.12 or thereabouts. That's Stevie's green line. That would be the logical test of support. Below that, then we'll have to come back to it at this stage. But we may see Treasury bonds top out today. Maybe they've already topped out. That's the signal, or that's the pattern that is in play right now. So it'll be interesting to see, obviously, if that unfolds, or if people are taking money out of bonds, are they putting it into equities? And if that one-day rate of change is below minus 10%, and we've got the whole combination of Stevie's green red line out there, you know, that further counter trend rally or bottom rally out there that is underway. If we go take a look at light sweet crude, what is it doing? It's having a nice day, I think up about 4%. And what is it doing? Well, it may be confirming Rhodes momentum indicator bottom. Price has been stretched, been moving lower, doing less relative energy. As we speak right now, 136. You've got a bullish reversal candle, the bullish engulfing candle. Price would need to, in the case of light sweet crude, get above Stevie's red line. That's currently at 48.27. Then the next area of resistance would be old support. That was the bottom of the daily profile, 50.08. Anything above that could take light sweet crude to 53.11, 54.12. Right now, what you have going on in light sweet crude is a bottoming message for the April contract out here. If we take a look at natural gas for its April contract, what is it doing? Well, in its case, price was also moving lower, doing less relative energy. But in the case of light sweet crude, natural gas, it's got to close above Stevie's red line. That's at 1.753 or 1.745 out there. If it could close above that, that would suggest more rally in it. That is natural gas. Let's not stop there. Let's go take a look at silver. Oh, well, what about gold, Steve-O? All right, well, let's look at gold, but in a moment. Let's take a look at silver. What is it doing? Not much. So as we take a look at silver here, silver is suggesting to Stevie, suggesting to you from a chart standpoint that it wants to continue to move lower. And it could move lower in a big way. It's got that nice daily Rhodes momentum indicator top out here, price closing below its breakout support of 1690. Its next level of breakout support would be 1544. That's what we look at when we see the daily time frame chart for silver. Let's go take a look at Goldilocks, see what gold is doing out here. Gee, I thought it was up, where is it? Gold up $26, up $26. But let's go take a look. What's up $26 actually mean out here? What did I do? Delete that? Oh, come on. Please don't tell me I did delete the gold chart. All right. Well, I'll tell you what we will do, folks. We'll take a look at gold when we get back from this breakout here, which is coming up in about 30 seconds. Let me switch over to this gold chart. Let's go see what gold is doing in all currencies. Trading lower in terms of euros. Trading lower in well, it's up slightly, but it's at the low of its session in terms of euros today. And I'm not getting a great read here. So I'll get my other chart going, the one that I deleted accidentally. And but what we're going to see here, I can already tell you what we're going to see. Price is trading between support and resistance, but I want you to know where that support level is, because if price breaks through that, it could be a cascade to the downside. Yeah, larger than what we saw last week on, Friday? Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So on the screen right now is that chart for gold as we take a look at gold. So here's what's taken place thus far. So we know we had both a TD setup 9-count top pattern out there. Bar number 10 was a bar following 9. So you see that pattern here. We took a look at that same pattern for 30-year treasuries out there. When you do get that topping pattern, remember, then the only real responsibility of sellers is to push price down to support. And we take a look at gold. That's exactly what took place on that day that a bear sash candle formed, when it confirmed that Rhodes momentum indicator top. That was on February 25th. But see how that green line continued to act as support out there? This tool that I've created here, this is what assists us in understanding the markets that are moving higher when just a normal retracement is a retracement back to support. Because this is a line of support or resistance. When price is below it, it becomes resistance. So right now, if I were to ask you the question, looking at Stevie's chart, if you're watching this on Tiger TV or Inside the Den, where is resistance on the gold contract? Right now, you would say it's at 1626, price at 1592. If I asked you where is support for gold, it's at 1564.40, which is exactly where price traded back to. Once price broke below Stevie's green line, then where's the next level of support? That is exactly where price went to on Friday. Now it's held, and it's held key level of support. That is breakout support, 1564.40. There's another one just slightly below it at 1551.70. If we do see that close below 1551.70, well, then the next move would be down to 1507. And below that, it's down quite a ways out here. So far, gold is somewhat neutral. It's still bullish. It's neutral. It's bullish from the standpoint that support is held, ultimate support, that 1564.40 level. But because it's trading in between support and resistance right now, really more of a neutral thing. But you've got the levels to be watching out here. And I don't know which way this might turn out, whether it's a bounce into that 1626 before it sells off again or not. But there's no bullish candle today, that's for sure. An inside bar, which typically means that price will continue in the trend that it just came from, which is downside, which may mean just retesting 1564.40. But be careful. Be careful, be careful, be careful, be careful. Don't get trapped. Just make sure that you've got some stops in place, regardless of which side of the trade you are in. Of course, that's just common sense to be used for every instrument out there. But Please use that for Goldilocks out there. Okay, what else can we go take a look at out here? High-grade copper. Let's go take a look at the May contract here for high-grade copper. We don't look at it too often, but what has it been doing out here? Coming into Friday, all price was doing. First, it forms a nice TD9 count top at the top of its task market profile. It's a daily time frame reason. That was at 263. From there, price pushes all the way back to support. Does that on Friday, where was support? Really two support levels. The bottom of its profile, 2.5124, but also the breakout level, 2.54, which eventually held. Now, where high-grade copper is headed to, you already know the answer to this. You don't even need me to tell you where high-grade copper is headed to. But at this stage here, looks like high-grade copper is headed to the top of that daily profile again, $2.63. And if price can close over that level, really what I would say is 2.6535 would be an ideal close above. And then you're going to go all the way back up to its highs. And that's at the 287 mark up there. So that's what's going on. We take a look at high-grade copper. Something we don't do. I did it when I filled in for Larry. I did an early. What it is doing out here. So as we take a look at it, let's pull this back. This forms beautiful patterns out here. Here's your Gartley buy that led to an A to B equals CD to the upside out here. Let's get rid of both of those patterns. So we know the pattern that it completed was a 1 to 1.272 A to B equals CD. Now price is pulling back. In this case here, the next key level of support inside the U.S. dollar index is going to be 97.10. We're trading around 97.22. I think I've got a 10-minute delay on this. Watch 97.01. I said 97.10. 97.01. A close below 97.01 says we want lower price. Lower price to where, Steve-O? Well, you know what? Instead of putting 3 lines on this chart, let me expand that to, unlimited lines. Let's go find out where the next level of support would be beyond 97.01. inside the U.S. dollar index. And below that, should it get below that, you're looking at 95.56 out here. But the U.S. dollar index forming a beautiful A to B equals CD top, does it with that bearish reversal candle. Price runs into support, Stevie's green line. Once price gets below that, it seeks out the next level of support. That was 97.76. Price has sliced through that today. That's why we can say 97.01 is the next level of support to be watching inside the U.S. dollar index. Well, what's the euro doing, Steve-O? It's like how I just talk to myself, ask these questions of myself out here. Let's take a look at what we have going on inside the euro. The euro busting through key levels of resistance. So you have the dollar busting through key levels of support. You've got the euro busting through key levels of resistance out here. By the way, the resistance level 1.1143 out here. So where is the euro headed to next? How about its next level of resistance? Well, it's got to get through the most recent highs out here, where we do have a swing point. Certainly, that's in about the 112.3 area. But above that, you're looking at a euro heading to 1.1394. That's its breakdown resistance that takes you to back to June 28, 2019. So that's what's going on in the U.S. dollar. That's what's going on inside the euro. Let's go take a look at the Great British Pound, get a feel for what direction this currency is headed. Looks like it might be different than the direction of the euro out here. So as we take a look at the Great British Pound, what do we know? Price right now is dealing with its breakout support level of 1.2828 or 1.2798. So just slightly below that, But a close below 1.2828 2 days in a row is going to suggest that the Great British Pound is going to pull back to its next breakout level. That is at 1.2206. Let's finish out the pair out here. When I say finish out the pair, let's go take a look at the Japanese yen. What is the Japanese yen doing? It's been getting stronger, this chart here, by moving lower. The price is right down into support, 107.65. That's the key level that price needs to stay above. If it closes below that, then what we're looking at is price pulling back to the 106.33. So there's your 3 primary currencies that make up the U.S. dollar index and what the U.S. dollar index is doing. All righty. So what else do we want to take a look at? Well, let's go take a look at the New York Stock Exchange. Oh, I know something we'll do. I'll get up the TAS market profile scanner see what's going on in the short-term time frame chart, see where we're at with market breadth. But in the meantime, let's go take a look at the New York Stock Exchange. It's a beautiful thing. It was just so oversold. It's got to work that self off. Now, do I have any clear signals out here inside of the New York Stock Exchange, inside of the advanced decline oscillator? I don't have anything from my readings here. I don't have anything that I could hang my hat on. And I like to hang a hat, if you know what I mean out here. You got that spot volatility index down 5.25 off 13%. I think that's the key number to be watching. Does the spot volatility index close down by something less than 10% today? Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Let's see. We've got a couple of questions that have come in here. Let me see if I can get to those. Alex writes in, hey, Steve, futures overnight move both ways. Big. Did that tell you anything? You know, the good question. The only thing that I could make from it was it is different. So if we take a look at the NQ, the NQ is the daily time frame. What it didn't do last night was take out the lows of Friday. So and that's a little bit of a positive considering the sold market that we had out there. You know, the areas that I was watching. Let me switch over to this chart here. Remember, if there's going to be some type of counter trend rally, if there's going to be some type of rally in the marketplace, here's the NQ as an example. What price needs to start doing is overcome resistance. And so resistance was 84.29.25. And so when Friday came to a close out here, we saw that price was above that level. And it was also above the close of Stevie's oscillator and change line on the 5-hour time frame chart that it acted as resistance. Last night, price gaps down, but doesn't even take out, you can still see the series here of basically, this is a 30-minute chart of higher lows out here. And so that's telling us something. Now, price ran into resistance out here. This is a 30-minute time frame chart. Its next level of resistance, that's where that TD9 count formed, 87.20.75. So this is the next key level of resistance that the NQ has to take on. Then there's 88.12.50, and then 88.85. So there's a bunch of resistance because of the thrust of selling that was going on inside the market to the downside. There's going to be a number of different roadblocks that are out there, which is why I just suggest that you fall back and pay attention to that spot volatility index one-day rate of change out there. It has a great way of working. By the way, inside the NQ, here's the 240-minute hour time frame chart. You can see the positive or the bullish crossover with regard to market breadth out there. So that is suggesting that it may want to continue to move higher. But on the 240-minute chart, just before we go off air here, let's go find out where that profile is. If I can hunt that down for you, you'll know the little hurdle that price has got to overcome. Here, we can do it quickly. Here's the 240. The level to be watching there is basically we're trading right now. It's called 86.54. Close above that, you're looking at 90.37. Folks, thanks so much for being here. Stay tuned for 2 more great hours. I'll see you tomorrow.
Since 1984, Basil Chapman has been